Shares of Chipotle have pulled back almost 20% since their highs just a little over a month ago. And this came after the hype that came along with the 50-for-1 stock split that Chipotle went through that really helped push shares higher. Now, I did a video previously, I can link to that in the show notes, about the actual impact of that stock split. And there's not really any impact on the company or the company's valuation. It's just that the number that shares are trading for, the price that you're actually paying per share, goes down, but you actually get 1/50th of the percentage of the company that you got when the price was 50 times higher. So a lot of mechanics there. There are reasons that companies go through stock splits, but that's not what I want to dig into today. Today I want to look at, is this the kind of value that we want to buy as investors, or is this a company that's still overvalued? Because Chipotle stock still trades for 60 times earnings. So let's go through some history of where the company has grown in the past, where it's growing in the future, and whether or not this is a value compared to some other companies in the market. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. So let's put some context to Chipotle's growth before I get to the overall numbers. The first chart I'm going to pull up is average restaurant sales. That's the column that you see. And that was rising consistently through 2014, 2015. Then they went through that salmonella poisoning phase. You might remember that. People were really avoiding Chipotle. And you can see that revenue per restaurant dropped to about $1.9 million. Keep that number in mind because I think it's always important to think about exactly how much money is going through each Chipotle and how efficient those operations need to be. At that time, there were 2,250 stores in 2016. So I think if you look at Chipotle's growth, that was a little bit of an artificial low point, but the company has consistently grown ever since then, now doing about $3.1 million in revenue over the past 12 months. At the same time, the number of stores has grown to 3,479. So just phenomenal growth rate on both the number of stores and also the revenue generated per store. So if we then go to the overall revenue and net income chart, you can see here that over the past decade, and I'm going all the way back to 2014, I think if you look just at 2016, that's going to give you an artificially low point for the starting point for the compound annual growth rate. So I'm going to go all the way back to 2014, so before the salmonella issues, and you can see that the compound annual growth rate from a revenue perspective for Chipotle is 10.3%. So that's a really solid growth rate. But this is where you get to some of those valuation concerns. Is a 10% growth rate the kind of growth rate you want to have for a company that's trading for 60 times earnings? On the bottom line, the compound annual growth rate, 12.2%. So a little bit of operating leverage there, but not a ton of operating leverage. And this is what you ultimately end up with in the restaurant business, is you have to pay for the food that you're actually preparing for customers. And then you have your overhead costs. And so there can be a lot of operating leverage there. But unless you're increasing the revenue per store on a really rapid basis, you're going to be relatively flat on the profitability per store. And that's kind of what we're seeing with Chipotle. You get a little bit more growth out of the bottom line than you do on the top line. But this is not a high growth company. And that's what I continue to look at with Chipotle. Very, very high valued. The stock has done extremely well. 373% return over the past 10 years. But that means that the multiples that Chipotle is trading for is much higher than it was a decade ago. And despite the fact that the company is a great company, investors are paying a lot for that. And especially when you put it in the context to what other competitors are trading for, I think Chipotle looks really highly valued. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Here I've pulled some of the multiples for some of Chipotle's competitors, and you could pull a number of different companies here, but I think this kind of gets the point across. Chipotle price to sales multiple is 7.8. Compare that to a company like Texas Roadhouse, very good operator. They have a price to sales multiple of 2.4. Portillo's and Jack in the Box have a price to sales multiple of under 1. So based on the price to sales multiple, you can see that Chipotle is trading for a much, much higher price than a lot of their competitors. Now, some of this has become because some of the pullback that's gone on across the restaurant industry. That's really happened in 2024. It seems like customers are really starting to pull back, maybe going out to eat a little bit less often, sometimes spending a little bit less in stores. We've seen that across the board. Then there's companies like McDonald's, where if you have gone to McDonald's in the past year or so, you've noticed that their prices have absolutely exploded. So we're starting to see them adjust their prices because customers going to McDonald's, see a $10, $12 meal, that's just not that appealing if you're getting a McDonald's type of experience. So we're seeing some of these price adjustments move through the system, and the valuation for these companies are coming down because I think the market absolutely sees this as more discounting is going to be necessary than we saw when people were just flooding out to restaurants at the end of that pandemic period. So that's why multiples have come down across the board, but we haven't really seen that at Chipotle. So that's why this is kind of an outlier. But if we look at price to earnings multiple, we see something similar. You can see here that Chipotle's trailing price to earnings multiple is 60. You go to Texas Roadhouse, it's 34. Portillo's is 24. Jack in the Box is just 9. So again, you're paying a huge premium for Chipotle. Is the stock worth it? I tend to think that it's not right now because of the fact that a lot of this multiple expansion, a lot of the recovery from 2016 and 2015 has already been priced into the stock. There's not a ton of places they're going to be able to continue to grow the company. So even that compound annual growth rate of 10% over the past decade is probably going to come down over the next decade unless a lot of that is related to inflation, which is not necessarily going to be correlated with higher margins. I also think the market has just generally over the past couple of years trended towards buying the biggest and best company, and that's where the multiple expansion for a lot of the big tech companies, a lot of the big restaurant companies, a lot of retailers have come about. So the hidden gems today are going to be those much smaller companies. The one that I am most interested in is Portillo's. They saw a little bit of a slowdown in same-store sales in the first quarter, so we'll see what happens in the second quarter, but phenomenal unit economics. They're making about $2 million in restaurant level EBITDA, or a proxy for cash flow, coming from each one of their restaurants. And they're expecting to grow their restaurant count 12 to 15% per year over the next decade or so. So this is a company that should be able to actually outgrow Chipotle over the next 10 years, despite the fact that it's trading for a much, much lower multiple from both a price to sales perspective and a price to earnings perspective. So that's the one that I have my eyes on. I own a relatively small position, but I think Chipotle is a stock that I would not be buying today just simply because of the price. There is a price that is too high to pay, even for some of the best companies in the world. Chipotle really falls into that category. So if you haven't checked it out, check out Portillo's. Not a restaurant concept that's in most of the country, located primarily in the Chicagoland area, but they're expanding in the Sun Belt. Some of those restaurants are doing phenomenal numbers. And if that continues, this could be a profit machine and a growth machine over the next decade or so. But what do you think about Chipotle and its future and its stock price? Leave your comments in the comments section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.